Good morning. Welcome to Stock Market Today. It is Thursday, April 23rd, 2020, and I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can find me on Twitter. I'm at Dan_Russo_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where I get a lot of the content for this show, as well as give you daily stock ideas to consider that hits your inbox every trading day before the market opens. So U.S. equities rallied in Wednesday's trading with all sectors closing higher on the day. Treasuries were weaker with the curve steepening. The dollar was stronger against the euro, but flat on the yen cross. Gold finished up 3%, and WTI crude rebounded, up about 19% on the day. As we get to the desk this morning, it's a little bit more of a mixed bag in front of the initial jobless claims report at 8:30. Mixed morning in Thursday's trading. Asian markets were mostly higher overnight, with Japan leading. European markets were mostly higher as well. Treasuries are mixed. The dollar is stronger against the euro, but weaker on the yen cross. Gold is up 80 basis points. WTI crude is up another 13% this morning, after rising nearly 20%. On Wednesday. As we take a look at the structure of the S&P 500, we're just going to keep it simple on this one, folks. All right. What used to be support is now potentially acting as resistance. We had a nice rally below resistance, and we have the initial claims data due out today. European PMIs are out this morning, and those were mostly below expectations. Should we fade from here? Initial support is around 2730, which we did hit in Tuesday's trading before yesterday's rally. Below that level, 2450 to 2600. Looks like the key area that holds retracement levels. At 2850 to 2900. We have left overbought conditions based on this 13-period CCI, and Chaikin money flow is bullish, but now taking a turn to the downside. So indicators remain mixed. Stocks are below resistance, at least as represented by the S&P 500. And we'll see what happens with the initial jobless claims data today, due out at 8:30. Taking a look at our market in a minute now. What are we writing about in the note today? Yesterday's rally was strong. Right, strong rally with all sectors closing higher. Breadth metrics improve, albeit slowly. Software continues to lead the broader market, while high beta lags the equity rally. Futures, as I said, do point to a mixed opening here today, and I think that high beta, that was kind of interesting to me in light of the rally that we've had off of the March 23rd lows. Taking a look at the major indices now from a power bar perspective, the Dow added 1.9%, 4 bulls to 7 bears. Bears on that power bar ratio. The NASDAQ outperformed after lagging the previous day. 18 to 20 bulls to bears for the NASDAQ, which in our opinion of the major markets remains the best game in town. Small caps continue to underperform. 175 to 339 bulls to bears. Some profit taking in the bonds, sending yields higher. Tech was your big outperformer yesterday, up 3.85%, but still sports a bearish power bar ratio, 8 bullish stocks for 17 bearish stocks. So across the board, small caps and large caps remain bearish from a power bar perspective as we dig in and do our work here each and every day. Taking a look at our stock of the day now, it's a name that I'm highlighting in my note today for Chaikin Analytics clients, and it's Box Inc. BOX is the ticker symbol for this one here. It does have a line above the 21-day exponential moving average. And, you know, with the market staying overbought for as long as it has, we haven't seen a lot of bullish stocks that become oversold in the near term. But Box is now oversold. The overbought, oversold indicator still heading lower. But Chaikin money flow is bullish, and this stock recently had what we call a personality change, where it went from being an underperformer to being an outperformer somewhere in the mid to late March timeframe. So as the market has rallied off the lows here, Box has been leadership. As I kind of look at the structure here, I see support kind of in the $13 to $14 range from a price-based perspective. I think a breakthrough 17 would be really would be really bullish here, as it would kind of take out this series of lower highs. But Box is an interesting looking name to me here, especially in light of the fact that the software stocks are performing well. And we'll take a look at that a little bit later on in the show. But I think names like days here. So let's take a look at our sector tracker, the movement of the major sectors over the last 5 days. Remember yesterday I showed you the chart of energy and how energy was holding up on a relative basis despite the absolute collapse in the price of crude oil. And now crude snaps back and energy is at the top of this list. Now it's 5 days, right? And we still said we want to give it more time, but I do find it interesting when you think that energy stocks should have come under a tremendous amount of pressure given everything that's happening in the oil market, and they haven't, right? So while I'm not ready to say, go out and buy energy stocks, it is something I'm watching closely as the relative strength actually holds up in the face of that decline in the price of crude oil. So I'm watching that really closely. I have to wonder, though, does anybody really care at this point with energy now less than 3% of the S&P 500? Healthcare, one of our favorite stocks, still towards the top of the list, discretionary in the number 3 slot. Utilities, tech, materials, and comms round out the groups that are higher over the last 5 days. But technology still remains, from a trend perspective, one of our preferred areas of the market. Losers over the past 5 days of trading: the industrials, the financials, the staples, and the REITs, right? So a lot of volatility, a lot of the kind of normal trends that you would think you'd be seeing, just not really playing out as you think they would. It's why it's important to pay attention to what is and not what you think should be. Obviously, some of the key relationships do remain in place, though, right? Falling rates, headwind for the financials. Taking a look at our industry in focus now, software and services. Okay, and this way we're looking at the XSW here, an equally weighted basket of software and services stocks, and it's been an inline to slight outperformer over the past 6 months, beating the S&P 500 by 72 basis points. Power bar ratio is neutral, 20 bulls to 20 bears, earns that a slot of number 6 of 21 subsectors, having moved down 1 slot over the past week. So some like this, stock selection does become really important, right? I look at a name like Box, that looks compelling to me, but names like New Relic, Appian, and Altair all have very bearish ratings. So we certainly want to try to stay away from those names, focus on the areas of the market that are outperforming and the stocks within those areas that are outperforming, right? So we want to avoid a name like New Relic, ticker symbol NEWR. Closed up 2.63% yesterday, but has a very bearish rating, is in a weak trend, right? Remember, I showed you the Box chart. Box is above its trend line. New Relic is below it, and that trend line has acted as resistance to this rally off the lows. At the same time, Chaikin money flow is mixed. Stock is getting close to an oversold condition, but look at the underperformance, right? Just has not been a stock, even my software has done well throughout last year and is now doing well again. This stock is just not participating from a relative standpoint, right? We want to focus on junction with that power gauge rating to find your best opportunities, and New Relic does not fit the bill, right? So if you're going through the software names, right, this is kind of a quick way to see where you think you should be focused for the long side and the names you want to avoid. All right, taking a look at what's trending now. Yesterday's S&P 500 gainers and losers. Chipotle up 12% yesterday following their earnings beat, and the stock did catch an upgrade here this morning. Lam Research, LRCX, part of that semiconductor group, rallied yesterday into their report, and then they reported last night after the close. Stock was up 11.5% yesterday. We'll see how it trades here today. Twitter up 10.5%. No real company-specific news there, but Snapchat had earnings yesterday, and that stock reacted well to earnings. It looks like Twitter went along for the ride. Halliburton, still a bearish stock, up 10% yesterday with that rally in crude oil. And APA, another oil stock with a very bearish taking a look now at the loser side of the board. L Brands down 15% as it looks like a private equity firm is pulling out of their deal. Biogen caught a downgrade at Citi. BIIB down 9%. UAL down 7%. American Airlines down 6%, and Kohl's driving that trading. Taking a look at our breadth metrics now as we look at what's playing out in the marketplace. Breadth is improving, but slowly. As you're looking at the percentage of stocks in the S&P 500 above their 200-day moving average, we can see that it's at 20%, still below the 30% level that we'd like to see. It is improving, albeit slowly. Now, taking a look at what happened back in 2018, 2019, right? We had a sharp rally, right? We were back above 30% within 2 weeks. That's not the case here in this regard. Same with the intermediate term, percentage of stocks above their 50-day moving average. In 2019, quickly snapped back. Here in 2000, we're not rallying as hard, right? It's a slower move. So the improvements in breadth are there, but they are playing out much more slowly than what we've seen in what we saw off the 2018 lows and the rally into the early stages of 2019. So that's kind of what we're looking at from a breadth standpoint. If I look at the percentage of stocks at Chaikin Analytics with bullish or very bullish ratings, it's still below the 10% mark that we've been keeping an eye on, right? So off the lows, I would say improving, but improving slowly is the best way to describe what's going on with market breadth. Now, I said software is leadership. We took a look at XSW. I'm taking a look here this morning in my note to IGV, the iShares North America Tech Software ETF. Right, and you can kind of see, just keeping it simple, right? We're above the moving averages. We're back above this kind of key level here at around $230. Now, working off an overbought condition, but the leadership here is what really jumps out at me. IGV relative to the S&P 500, a nice steady uptrend that started back in October of last year, and we do remain in that uptrend. Seeing a little bit of a consolidation here in the near term, but I want to pay attention to relative strength. I want to pay attention to what's going on in the market. So yeah, that looks kind of interesting to me on a relative basis and on an absolute basis as well, as it's, holding, breaks above the 200-day, pulls back, retests the moving averages and rebounds. So if I'm thinking about where is leadership in the market, I have to be thinking about software as a leading area of the market for the time being. But high beta is not, right? Taking a look at SPHB, the Invesco S&P 500 high beta ETF. This is kind of interesting to me because, it fell off a cliff with the rest of the market. There was a big negative divergence, right? As high beta was testing the highs, RSI made a much lower high, market falls off a cliff, high beta becomes oversold. Now we're trying to rally back, but we can't get out of bearish rages looking at the RSI here. And on a relative basis, high beta has not done much relative to the broader market as the market has rallied off the lows. So I kind of pay attention to that. You would think that if we were truly in a risk-on type environment, that the high beta names would outperform, but that's just not the case for the time being. Right, high beta SPHB within Chaikin Analytics has a bearish ETF rating, only 6 bullish stocks for 30 bearish stocks. So still seems that investors are taking a more cautious approach even with the rally from the March 23rd lows. So that's something that jumped out at me. That'll wrap us up for today. Take us for a test drive, chaikinanalytics.com/test drive. Sign up for a 14-day trial. I'll be back with you tomorrow.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.